It's Friday, April 18th, and you're tuned in to the Stock Market Daily News Podcast, your quick hit of everything moving the markets. Yesterday saw history made as both the S&P 500 and the Nasdaq closed at fresh all-time highs, with the Dow Jones also posting a big gain. The S&P 500 finished up 1.2%, while the Dow jumped nearly 900 points for an impressive 1.8% surge, and the Nasdaq rallied 1.5% for its best close ever. Fueling the rally? A dramatic drop in oil prices after a key Middle East shipping route reopened, making waves across multiple sectors. We'll break down what's driving markets, which companies posted eye-popping numbers, and the trends you need to watch heading into the weekend. Let's jump in. Our top story: oil prices plunged over 11% after Iran announced the Strait of Hormuz would be fully open to commercial vessels for the duration of the current ceasefire. U.S. crude fell to $83.85 a barrel, its lowest since early March. Brent crude also dropped 9% to $90.38. That's the second biggest one-day drop since the war started, giving a jolt of relief to markets worried about sky-high energy costs. Gasoline futures fell 5%, and analysts predict that prices at the pump could soon fall to between $3.65 and $3.85. The move powered stocks sharply higher, especially for sectors sensitive to energy costs. For investors, falling oil means lower inflation risk, improved margins for transportation and consumer stocks, and renewed risk appetite for equities. On Wall Street, financial stocks were buzzing as investment banks posted blockbuster quarterly results. Morgan Stanley's profit jumped 29% to $5.57 billion, Goldman Sachs rose 19% to $5.63 billion, and JP Morgan reported $16.5 billion, up 13% year-over-year. The story: trading volumes have soared on market volatility tied to Middle East tensions, driving big wins for banks on commissions and client activity. But remember, when volatility quiets down, these gains may slow, so this trend is something traders should watch closely. Turning to tech, the sector is back near the top, but analysts say caution is wise. The technology select sector SPDR is up 18% since late March, propelling the Nasdaq higher. However, SocGen's U.S. stock chief says not to rush in just yet. He points out that tech giants' cash flows are still under pressure from heavy AI investments. The tipping point, he argues, won't come until these companies' big spending finally starts to pay off, likely in early 2027. So, investors seeking sustained outperformance may want to favor a more balanced exposure for now, including sectors like industrials and utilities that are benefiting from high power demand. On the consumer front, PepsiCo delivered upbeat earnings by cutting snack prices, and shoppers responded. The company's North American food unit saw sales volume rise 2% after slashing Frito-Lay prices by up to 15%. Total revenue climbed 8.5%, topping Wall Street expectations. But beverage sales remain soft, down 2.5%, as Americans balk at higher soda prices. The takeaway: affordable essentials are winning out, while price sensitivity continues to shape consumer and portfolio decisions. Finally, in alternative investments, Gabelli Equity Trust's hefty 10.6% dividend yield is attracting income investors, but beware the details. The fund's payouts are fueled not just by portfolio income, but also by leverage and returning shareholder capital. In down markets, this structure can erode the fund's value, so investors need to weigh the risks versus a traditional dividend play. Quick recap: major U.S. indexes posted 3 straight weeks of gains, with record highs for the S&P 500 and Nasdaq. Volatility continues to offer both opportunities and risks, with financials, tech, and consumer staples all in focus. Looking ahead, watch for more earnings from big names, upcoming economic data, and any signals from the Fed on rates. That's your Stock Market Daily News rundown for Friday, April 18th. Don't miss a beat, subscribe, follow us for breaking updates, and stay smart in the markets. Have a great trading day.